Emad Mostaque is a London-based Middle East fund manager for Pictet Asset Management, which oversees more than $100 billion globally. Good afternoon to you, sir. Is Dubai's weakness potentially presenting opportunities elsewhere in the region for you?
Yes, I think it is. I mean, if you look at Dubai on a MSCI Arabian markets / Middle East North Africa basis, it only actually makes up 6% of the index. But today you saw the Egyptian market actually fall more than Dubai, falling 8% versus 7.2% for the Dubai markets. This is basically because you're seeing investors take risk off the table, which has a collateral impact upon other GCC and North African markets, in spite of the fact that the fundamentals really aren't affected by this news.
But the spillover effect is what so many fear. You don't see that there?
No, I don't actually. I mean, if you consider the actual what drives these countries' profitability, Dubai was very much a credit-led bubble,
right?
Which is now obviously redressing itself. If you consider the other members of the Gulf, these are all hydrocarbon-rich societies and countries which have almost no debt and will push through with their infrastructure building over the next few years, almost regardless of what credit markets say, because they're funding it from revenues and from reserves.
So Dubai doesn't have the hydrocarbon cushion, as you were describing it, but the idea that Sheikh Mohammed had about diversifying the economy there away from the dependence on oil was supposed to be sort of the vision of the future. Qatar is also trying to replicate that to a certain extent, Saudi Arabia, but are they truly going to be able to diversify away from the reliance on oil? I mean, how much leverage is there still there?
Well, I mean, oil and in the case of Qatar, gas will continue to be the major part of the GDP of these nations. However, if you look at it in terms of corporate profitability and the actual equity markets, regardless of whether or not they actually achieve their stated aims of diversifying away from these totally, there will be huge corporate profitability increases coming from the infrastructure programs that are being rolled out. I mean, we're talking about a 1-2 year, let's change our economy completely from an oil-dependent economy to a service economy. This is more like a 10-20 year program. For example, Abu Dhabi's plan is called Abu Dhabi Vision 2030 for a reason. These are long-term plans, and I mean, they will continue to support corporate growth in that region.
Right. Well, the key date in the short term that so many are watching is December the 14th. That's when that $3.5 billion Dakhil Sukuk comes due. What is your outlook here? What are you looking for in terms of how this debt is handled?
Well, I mean, as many have said, the key thing here is transparency. The timing of the announcement was less than ideal, and we're literally just looking now for Dubai to give us a roadmap of how this will be restructured. In terms of what they're actually trying to do in disaggregating quasi-sovereign from sovereign debt and basically saying this is a private company. We had implicit backing, but it's not explicit backing. That's admirable. Dubai will continue to be supported on a sovereign level by Abu Dhabi. Dubai World needs to restructure itself. It needs to pay its creditors in due time. It needs to diversify some of its assets. On December 14th, it's looking increasingly unlikely that we'll see a full bond repayment, but they need to at least have a nice, clear roadmap as to when creditors will be repaid and what steps Dubai World will take in order to maintain its creditworthiness as an independent entity away from the Dubai sovereign.
Emad, you say this is an overreaction to what we've seen in Dubai in general. However, are you not worried that if they do default, it means nothing potentially is too big to fail in the Middle East?
Well, I mean, if you consider, as I said, the actual macroeconomic outlook of the other Gulf countries, they're very, very solid. If you look at the structure of some of the private enterprises, you have good private enterprises, you have bad private enterprises. We saw with the Saad Al Ghasaibi $10 billion default that even some of the most highly respected Gulf families can have issues and they can default.